Hey there traders, welcome back to my channel. My name is Desmond Samuel and I am back with another episode of my weekly Forex Forecast. Now, if you're coming across this channel for the first time, then you're wondering what this forecast is about. So this is a segment of my YouTube channel that I've actually put aside to come around here every single weekend to give you guys the best, the absolute best of the best trading setups, and then also give you guys clarity as to what to do per time, per season as time unfolds across the FX market. All right. And I need you guys to just do me a favor and see right there and then watch this video all the way to the end, because I like to leave the best for the last. And then also, if you're new to my channel, please kindly hit the subscribe button, leave a like and comment, and also don't forget to share this video. All right, so the first pair on the list now is the euro dollar. Subsequently, in recent times, I've actually been calling this pair to the upside. If you've been with me for a while now, you can actually tell that we call this pair right from this bottom here and then this bottom here, and we've been studying, with a bit of a sideways movement, pretty indecisive. However, the NFP numbers, the non-farm payroll numbers came in quite bullish for the dollar, and as things stand, we've actually gotten the pullback that we're actually banking on, and this is exactly where we're at now at the moment. We had like a decent double bottom here, as you can see here, and then we had like a break above, and then this is a retest. So once we scale down to the daily time frame here, you can see that we actually have room to the upside, right? We have enough room to the upside, although this pullback here is coming in form of a chart pattern, which is a double top. And whenever you have a double top in an uptrend, that is maybe a potential reversal or maybe a pausing in the whole trend. So what we'll do now is actually that we'll go ahead to plot our trend line from this bottom here, try and connect the dots. Okay, and you guys always know that the third touch of the trend line always does the trick in the market. So as you can see, and then one of the ways to actually know how a market will potentially pull back is by studying the previous pullbacks. Right? As you can see, yeah, this is balancing, and then this is nicely tapped into the third touch of the trend line. And then what we need to see now is the 4-hour bounce of this particular level here. So two things could happen here. We could either see a bounce off of this level, or we could either see a break below. But I'm favoring these guys to the upside by to the tune of 70% to the upside, and then actually 30% to the downside, because anything could still happen. But still, from the technical look of things, as things stand across the FX board, across the FX board, the dollar, and then the euro board, I kid you not, this thing is pointing to the upside. It is more bullish than bearish. All right, so what we need to do now is actually look out for a decent 4-hour engulfing candle. Okay, so a 4-hour bounce or a daily bullish engulfing candle here. Entries are made around here, and then stops are below. While we ride this guy all the way to the upside. So my first level target will always be the recent high, which is right about here. Okay, so after this here, we have space to the upside. So altogether, we have about 500 pips to go to the upside. All right, so this is like trade for the rest of the Q4 if you're good enough to actually just start the trade and then let the market work for you, which is what I always advise. By the way, my course is coming out, guys, and also you can actually pre-roll for it, pre-enroll for it before you actually comes out. All right, so Euro USD to the upside here. First level target is this bar right here, and then once we clear this bar, we have space to the upside here around here. Okay, and then how did I get these levels? It's very easy, guys. Just simply look left. Okay, once you scale up to the higher time frames here. So the thing is to go on the higher time frame, do your own analysis, then come on the weekly time on the lower time frame, and then execute your trade in direction of the overall trend, which is this point here. So first level target is here, then second level target is here. This supply level here. All right, so it's very simple. So that's just that for the euro dollar in a nutshell. So the next pair of my list is GBPUSD. So GBPUSD also has a decent opportunity for us to go long on this pair now. We've had a decent pullback. Actually, this is the pair. This is the chart supply. Hold on, guys. GBPUSD. This isn't on my watch list. This isn't the one on my watch list. Sorry, guys. Let's go to Wanda. All right, so this is it. So GBPUSD here in a nutshell here also has a similar structure to that of the euro dollar here. So we have space to the upside. Ideally, we are banking on this pullback here to happen, and then it has actually happened. So what we had here was the formation of a trend here. So we have a low here. This is a high, higher low, higher high, higher low, higher high, higher low here. All right. So the market is only pulling back for that second pullback here on this level here, because once you get down to the daily time frame, the market had already created a demand level before it actually continued to the upside. So this was the impulsive leg, pullback continuation. So this is just that retest or that demand level before we actually continue to the upside. So what you need to see again, similar to what's happening on the euro, is that on the 4-hour time frame here, you need to see a decent 4-hour engulfing candle, all right, an engulfing candle, or maybe a bullish pin bar, any sort of a candlestick pattern that actually signifies bullish pressure here. We can actually come on here and then slap the trade here. Obviously, first level target is always here, and then once we clear this bar, we have space all the way to the green bar right here. So again, for the pound sterling, we have about 1,000. Roughly 1,100 pips to go. All right, 1,100 pips to go on this guy here. And then obviously, if it's not going to happen in a week, it might take a while, might take a month or two. But yeah, the first level target is always here. And then once we blow through this bar, we have space all the way to the upside. All right, on this green bar here. And then also for contingency plans, in case the market decides to be funny and then it breaks below this bar, I'll be here again once again to let you guys know, which is why I urge you guys to subscribe to my channel and click on the bell icon so that you don't miss any new updates. All right, and follow my channel closely. And even after watching this video, be sure to come back and watch it again, because you're going to learn a lot of things by just watching my video before you even pay for the course. All right, so as you can see here, from here to here, we have a decent trend line to work with, and you can see the market is just coming in for that touch of that trend line here. So once that is said and done, everything is balanced out properly. The market has to come and balance out properly here, and then give us that engulfing candle. The same way it did here. You can see the engulfing candle here. We need to see that here as well. So once you see that decent bounce and that engulfing candle, play right here, we are very confident that this guy is going to blow through the sky. First level target here, and then subsequently we blow through the move to this 1,000. To the tune of 1,100 pips to this blue bar here. The next pair on my list is actually the pairs that my students have been listening for me to talk about, which is Euro GBP card. Right. So for GBP card now, this is how things look. I'm not really a big fan of this pair, but for the sake of my students, I would definitely talk about it. As you can see here, same thing with the pound sterling here. The market has actually come to create a demand level, very solid demand level here. And they will vote it out from here, and then this is just a decent pullback to this particular point, and you can see this matches perfectly with my Fibonacci. So you guys know me, I do nothing without Fibonacci. So from swing low to swing high here, we've come into balance in at the 0.618 and the 0.5 region, and everything is looking decent. What we need to see now is a 4-hour candle bullish engulfing pattern here. Then we can actually blow this thing up to the roof. My chart is frozen. All right, sorry guys, time is a bit slow. So yeah, so from this swing low here to the swing high, the market needs to pull back deeply into this point and balance out properly. Once it's said and done, we could actually. So what you need to see is one more leg down on this guy. Just one more leg down on this guy. Maybe fake out a few early buyers here and then pop back up. As it's about to rally, that's when I enter and then blow through this guy. So fundamental target is always the recent high, which is from here to here, recent high, and then once we clear this place, we have all the way to the upside, which I'll be back here again to let you guys know, which is why once again I urge you guys to subscribe to this channel and click on the bell icon so you don't miss any updates from me. But the next pair on my list now is AUDUSD. AUDUSD has been a bit of a very annoying, disappointing period. It didn't pull back to the place I wanted it to pull back into. Then I had to do like a review of the levels I plotted, and it turns out that level has actually been validated. All right, so let's see things from a bigger time frame, which is the weekly time frame now. Yeah, so this is how AUDUSD looks on the weekly time frame. Pardon me for the disorganized charts. All right, so if you look closely here, we have some form of a trend. All right, so we have been on a bearish trajectory for years now, and if you can plot your trend lines nicely, you can see that first touch, second touch, third touch. So the market only came in for a third touch of the trend line here, and this is very dicey in the sense that this is happening at a very critical point. So you guys have to be extremely careful. So what we need to do here, I mean, obviously there's been a shift in direction, a shift in trend, a shift in momentum here, because we've decided to put in series of higher lows from here. However, as things stand, we are actually at a very, very critical zone here, and I'm very confident that AUDUSD will still go through because gold is blasting through because of the crisis in the Middle East now. These crises are actually sending these pairs blowing through the sky. We're talking about silver and gold. So and AUD is closely correlated to gold. So if gold is bullish, I see no reason as to why AUDUSD should be bearish. All right. So what we need to be looking out for now is if you come on the weekly time frame, you can see that the market had actually broken above a very, very, very strong demand level, which is somewhere around here like this. So you need to stop expecting the market to pull back into this point because it may not pull back to that point because of this demand level here. Again, this is the weekly time frame. It takes about 5 trading days for this candlestick to form here. So this is a very solid demand level, right? And then this is also with the market that has had issues breaking above to the upside, and then we just did that right now. So this is a decent break and retest. All right. So once you get onto the daily time frame here, and make use of your Fibonacci, you can say that things are actually line up pretty nicely. So what we need to do is actually allow this market to form a reversal pattern to the upside. We're talking about the 4-hour daily engulfing candle. And we need to see a pattern, because if you come on here and use a Fibonacci from swing low to swing high, this is where the market is balancing at. Okay, so we could even dip lower to this demand level here to just maybe stop out a few early buyers, and then now using my upward trajectory. So what we need to do is wait for this guy to pull in deeper into that point, and then we can definitely strike this guy, because this is actually sitting on the top of the trend to the upside, and then top of the trend to the downside as well. So it's quite critical at the moment. It is not exactly my favorite at the moment because it's quite dicey. However, we need to make money. So we now go ahead to plot our demand level somewhere around here, and just allow the market just reach thing. What we need to see is just that 4-hour bullish engulfing candle. Once that is done, like once you see a decent candle from here like this, pam, entries are made and then stops are below here. TP obviously here, this high, you have to remember this trend line here, and then obviously this blue bar right at 0.700, which is a rounded figure. As you guys know, AUDUSD loves to go to rounded figure. All right, those are psychological levels. So the next pair now on my list now is EURUSD. So my students asked me to talk about EURUSD, so I'm going to talk about those. EURUSD also has a bullish structure formation as well. I see no reason as to why we should not blow through the sky, and I will talk about USDJPY and the Japanese index in a nutshell, because we are about to have another collapse of the Japanese index. So you guys hear me here. 2023, I did this thing effortlessly, and I'm really here again for you guys to also take advantage of it. All right. So what we need to notice here is that the market has pulled back into a very decent demand level here, and it has bolted out. It didn't bolt out in a funny manner. It bolted out with a chart pattern on a weekly time frame, guys. This is a weekly time frame. This is an inverse head and shoulders pattern. This is the sign of a bullish shift after this impulsive drop here. So what we need to see now is scale down to your daily time frame here. Actually, let me see how many conferences we have to work in, because I love conferences, guys. You have to allow the market meet your condition. It shouldn't be the other way around. All right, so as you can see, okay, all right, so this is still quite dicey. We have a trend line that the market is actually testing at the moment. So what we need to see is, at first, the market came into that trend line and then it bounced off of it, but that's fine. So what we have to see now is a decent breakout. You can see this chart pattern formation. It is inverse head and shoulders pattern here. So what we should actually wait for now is for the market to break above here and then pull back. You can see this is forming a trend already. This is a low, this is a higher low already, and then this ought to come in for a higher high here, and then coming for a higher low. Then at the reverse of this trend is when we now blasting through the roof. So what we need to see is something like this. A break above here, pull back, a balance out nicely, and then blow through this guy, because this is evidently a reversal pattern to the upside. So this is an inverse this pattern where you have the head, shoulder here, and then once this is broken and retested here, we have space to the upside to first time target is 175, and then subsequently we should blow through this guy to 186 in the region on this pair. All right, so the next one that my students spoke about was oil. Actually, GBPUSD first before we talk about oil. Crude oil is also starting to reverse to the upside. GBPUSD. All right. So let's talk about this. Let's talk about GBPUSD. Pardon me, guys. This thing keeps bringing the chat. I don't use. So yeah. Also, JPY has the exact same formation of the JPY. And one thing about the JPY pairs is that once one pair is bullish, the rest will follow suit. All right. So just knowing in what direction JPY is moving also lets you know what other direction that the rest of the JPY pairs are moving in. All right. So what we have here now is a reversal chart pattern here, as you can see on GBPUSD. So this is why I'm quite confident that the patterning is heading higher. Okay, because now we have actually broken out of this range here. Every chart pattern is a range, guys. Take note. So we came into the demand level here, and then we actually bounced over. You can see this bullish pin bar here, and then followed by this head. So this is the head, shoulder pattern. So once you scale on to the daily time frame here, you can see how things look in a clearer picture here. So this is creating a demand level that the market would work with, in the future. So what we need to see the market do is actually blow out of here evidently, then come back to retest it. So once this test is done here, we can now actually come and then go long on this pair. Obviously, first target will always be the recent high, which is right around 208, and then subsequently we should blow through the sky to higher points, which is around 216. All right. So what we need to see is the market needs to come in for a pullback, actually come in for a pullback to this demand level that it has created here, and then we can now talk about going all the way to the roof. All right. Next pair now on my list is let me see the pair that I'm talking about, AUDNZD. All these awkward pairs, man. So let's talk about AUDNZD. So for AUDNZD here, so let's do a quick top-down analysis on this guy. Let's start from the monthly chart frame. Let's see how things look. So this is by sideways, which is why I always urge you guys to stick to the major pairs. AUDNZD is sideways, as you can see. You can't make money off of it because it's just a sideways movement. All right, there's no trend in this. There's no trend to work with here. So buy for AUDNZD. Next pair is GBPUSD, GBPUSD. Let's see how things look. So I called out this pair to the downside earlier on this last month, I guess. However, for some reason, the market had just had issues breaking to the downside, and then when I checked, I saw that the pound sterling itself was actually very, very bullish. So hence, this guy could not actually have that momentum to the downside. Now, as things look here, we could be blowing through the roof now to the upside. Now, as things stand, we're actually coming here to break structure to the upside. So this is a change of structure. We have the low here. This is a higher low here. So we could even continue higher on this pair. But I would urge you to mirror what the pound sterling is doing versus the dollar. That will not give you an insight on what to do with this guy, because this is quite still in a range. I'm not gonna lie to you, and I'm not really good at range trading. But one thing is for sure here: if you must, you can actually come in and enter this trade at the break of this counter trend line here. But be careful, because the source must come on underneath this point and then take profit at this point. All right. So this is just a break and retest to the upside for GBP For EURUSD, let's see how things look. EURUSD now. EURUSD, let's see how things look for EURUSD. Okay, so EURUSD is talking in the range from our own previous trade call. If it does me, you can always go ahead and then review my videos here. So this is still stuck in the range. However, whenever you're in a trade and the market takes forever to get to your take profit point, you might as well just close the trade and then move on, because this is still sideways, and the way the euro is pointing to the upside, this could easily reverse to the upside. So what you need to see is allow the market decide in what direction it wants to go, because right now it's still in a range. So allow the market decide, is it going to dip lower to this point, or is it going to blow above here? We don't know yet. So, but one thing is for sure, we are in a downtrend. That is quite paramount. However, what you need to see is a decent candlestick breakout of this downtrend line here. Once you see a breakout of this downtrend line to the upside, then you can be confident about buying these guys to the upside. But first things first, we have some hurdles to clear, which is this yellow bar here and then this trend line. Once this is out of the way, we have space to the upside. You guys know me, I love space. So you have space to the upside. We have about 500 pips to go on EURUSD to the upside. Yeah. Which other pair? USD card. Let's talk USD card. So for USD card, I was highlighting this pair to the downside, and I'm still highlighting it to the downside. If you look at things from a broader standpoint, from a bigger grand standpoint, you can see that this is forming a double bottom here, which is quite to me, it is insignificant, because this trend it could be reversing, because on the monthly time frame here, you have what this looks like, inverse head and shoulders pattern formation here. So this is giving us this is giving us head and shoulders pattern and a triple top here. So we have no reason as to why this should continue higher. In fact, monthly time frame, we've put in this bearish engulfing candle here already, and this is even looking like head and shoulder pattern with the double top and the right hand side. So what we need to see, maybe this perhaps to pull back deeper to this. I think there's a supply level here once you get onto the daily time frame, although USD is quite choppy, but we could actually see the market come back into this supply level right around here, and then we now reverse from there. Okay, this is a supply level here. So it has had in the past, so we would most likely hold again, and then we could easily see this guy come in here and then collapse further to the downside, as far as US guy is concerned. All right, so for this pair here, we'll just wait for a reaction around this level here. The first level target on the sell trade will be here, TP point will be there, and then subsequently we should blow through the, to this point and this blue bar here, and then also once we can break below this bar here, we have space to the downside, because this is in a range now, and I kid you not, once this guy can blow through this and then fold back, below here, and then break this bar here, we have space to the downside. So we have roughly about 1,000 pips on USD category. However, we could easily blow through from here. However, there's just in recent times the market has had issues breaking above here. So, and then also this price has stuck in a range. So they don't have one clear direction at the moment, which is why I want you guys to always stick to the clear direction, guys. The pair has to give you a clear and concise direction before actually hop on the trade. A chart has to be able to look at this pair and tell you what direction it is headed. Is it headed up or down? At the moment, this guy is stuck in a range, so it's quite indecisive. All right. So let's move on to the rest of the pairs now. Someone mentioned GBPUSD. Let me see if that is even clearer. This is why I urge you guys to trade the pairs with clear direction, man. I kid you not. You will not regret it. So for GBPUSD, it turns out that I had an analysis on this guy already. And as things look here, we have actually created a demand level off of this inverted interest pattern here, neckline, back and retest. So this is looking like a nice balance on this guy. So what you need to do is get down to the daily time frame here and see how things look for yourself. You must have every single thing pointing to the upside before you take a buy trade. All right. So from here, just have like a decent candlestick. Actually, this is looking good. This is actually looking good. Let's see how things look on the 4-hour time frame. Actually, this is looking good. So you can go ahead and buy this pair now from here to here. Obviously, TP should be this green bar right here. I did this analysis sometime back. I'm just not a fan of all these pairs, to be honest, but I did an analysis sometime back. So entries can be made here, and then stops can come below here, and then you can write this guy to the upside. I think we are done with all the pairs that my students asked about. So let's talk about our own pairs now. So let's talk about US oil. So for US oil now, so this is how things look for US oil from the weekly time frame here. I've actually had a very decent trading experience with this guy, because we'll be here to short this guy. We sold this guy right from this $81 a barrel region, and then we'll be selling this guy all the way down to the downside. However, now we've come into a very, very solid demand level that has held right from the year 2021. It has held very, very well. However, so two things now are very, very possible here. Two things are very, very possible. Scaling down to the daily time frame here, we have a trend on our hands here. So we are still in a very trend as far as the daily time frame is concerned. However, let's see how things look here from this swing high here to this swing low here. So the market could coming into this trend line here to play with that trend line before actually continue lower. But with the Middle East crisis, oil prices are about to blow through the roof. Actually, because with all these crises comes, bullishness in oil, in silver prices, and then also gold prices as well. That's why gold is not pulling back to the point that they were actually wanting it to pull back. Then also, you must also take into consideration this trend, this Fibonacci here, what we have from the swing high to the swing low here. So the market could even reverse from here. However, I'll just leave that for the market to actually decide. But as things stand here, we have hit a very, very decent demand level, and then we're actually reacting off of it. So this buy is a deciding factor. Are we going to go higher or fall lower? This buy will decide. So I urge you guys to actually wait out this pair, give it a week. All right, so give this pair a week, to decide, and then we'll now know what direction to place the trades in. Then also you also need to understand that this pair is still in a range as far as I'm concerned. This is a double top here, neckline top can be tested. So we could even come in here and then reverse, or we could actually go higher. This pair and this trend will actually decide. All right, so let's talk gold in a nutshell. So XAUUSD has been very, very bullish, creating new highs, almost like it's creating new highs every week, for real. It's been breaking through the roof, creating new highs at every single point. So these are how things look. I'm still keen on my pullback to this 490 dollars per ounce for gold here, and then we have space to the upside to $3,000 per ounce as far as I'm concerned. We have actually smashed through my target, which was $2,600 per ounce. I called it out on YouTube here. If it doubts me, go back and watch my previous episodes. You can actually see yourself. And then also, what we need to see is for this pair to pull back into the demand level here, if at all. And then we have this solid swing to swing high play here, where the market could even come in deeper here, and then we actually go through. So first, we target always this high here, and then subsequently once we clear this bar here, we have space to the upside. right away to $3,000 per ounce for gold. Let's see how it looks on the lower time frame, being 4 hour time frame now. Let's see. So it hasn't had any. This is still a range play as far as I'm concerned. So if this pair doesn't pull back deeper here to this point here, a break above this range here is a decent entry, chance for you to actually ride a trend to the upside. Okay, so gold is free, it is gone. Gold is gone. It actually headed to $3,000 per ounce as far as the technical analysis is concerned. So for the next pair on my list now is, let's talk silver. Hold on. Talk about silver now. So silver has been on a radar for quite some time now, for quite some months. As you can see here, I've highlighted silver to the upside for quite a while now, and we've just been hearing the step by step. And right now we're actually trading at about $33 per ounce for silver. One thing is sure, we're actually headed to $35 per ounce. However, we need to see the market dip back down below here to actually clear up, and fulfill some technical criteria before actually continue to the upside. Or you could actually come here to this demand level and then play with it, because if you prorate it from swing low to swing high here, you can see that this demand level falls at around this level here. So we could even see the market come into this demand level for actually go to the upside. Otherwise, you should watch out for those two levels carefully, because we are definitely headed to $35 per ounce as far as silver is concerned. The next pair on my list now would be the S&P 500. So the S&P 500 technically has been on a bullish rampage. It has been on a bullish trajectory for quite some time now, and for some reason, he's having issues pulling back to this point here. So what we need to do here is very simple here. The market has failed to follow up with this double top informed here. Instead, it came and gave us a fake out, or a fake chart pattern, you might call it. So what we put here is a bar right here, like this, okay? So the market has to, rally for quite some time, then pull back before actually, start talking about, bringing this guy to the upside as things stand, because we have space to the upside. Remember, guys, our prime target for the S&P 500 is 6,400 basis points, and you're hearing it here first on Desmond's radio. 6,400 basis points for S&P 500 now. So if you're hearing me, Yahoo Finance, Bloomberg, whatever news outlet out there, you're hearing it here first. The fourth level target for S&P 500 is $6,000 basis points, and then subsequently we should blow through to 6,400 basis points as far as S&P 500 is concerned. However, you could also work with lower time frame demand levels here. Let's talk some lower time frame technicals here. So scaling down to the 4 hour time frame, we have obviously room to the upside still. However, the market has to come and then create a new demand level, which is most likely what is happening at the moment. As you can see, the market, instead of pulling back, can always go ahead and create new levels. Okay, so this is more or less a failed double top here. Instead, the market has even come on here to play with this demand level right around here. So what we have to see now is market needs to rally from here, then pull back to the demand level, then give us a decent entry criteria like this bullish engulfing for or take the candle, candle pattern here, or we could dip back down to the trend. And other ways, I'm actually very bullish on this guy here for S&P 500. I'm going to watch S&P 500 closely. This isn't looking very I mean, the direction is quite obvious. It is upwards. However, we don't have any decent entry condition, entry chance yet. So I'll be here to let you guys know, which is why I urge you guys to subscribe to the channel and then also turn on the bell icon so that whenever I come on here to let you guys know that this pair already the video, I'm on the very first video to hear about it. The next pair on my list now is NASDAQ. So for NAS 100 now, we've been on a very bullish trajectory for quite some time now, and NASDAQ seems to be the one with a clearer picture, clearer direction. Here we'll have the break off with counter trend ahead, and then this is headed to the upside. So what we need to see is the market needs to rally for a bit and then come back down to this demand level. I can see some demand level plays right about here. So yeah, the market has to come back into the demand level before actually go through the roof. So first level target will always be the recent high here, right about 20,755 basis points, and then once we clear that, we have space to the upside to 22,800 basis points as far as NASDAQ is concerned. The next panel on my list is US30, the Dow Jones Index. The next panel is US30. US30 also has room to the upside. I'm bullish on all these pairs as far as the technical is concerned. However, for US30 now, we have space to the downside. Okay, we have room to the downside. The market has to come into this bar right here before I can actually be moved to place any trade on this guy. I've not even moved at all. As far as I'm concerned, we still have some decent Fibonacci play here at work, which is from swing low to swing high here. So once this pair now pulls back into this yellow bar at 40,200 basis points, we have space to the upside. as far as USD is concerned. So the first level target for this pair, once this pullback is actually completed, for the $2,630, started for 2,630 basis points, and they want to clear that we have space to 47,000 basis point for US30. Next pair now on my list is let's talk BTC as we look to round up this particular episode of our weekly outlook here. So BTC, on the other hand, has been very, 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 very sideways, very, very indecisive as far as I'm concerned. However, we have space to be downside. The market has to come into $57,000, $55,800 per coin here. And if you look closely, I have been calling BTC right from $71,000 per coin. We collapsed this guy all the way to $49,000 per coin. And then, so for some reason, the market seems to be playing around with people's emotions. So as things stand here, we have an inverted pattern to work with here, and the market is looking like it's headed to $72,000 per coin. But what we need to see is a decent pullback into the 58K region. Once this is done here, we have space all the way to 72K. All right, but we need to see the market go deeper. As you can see, I have my alert set here because I will most likely not be on the screen, which is the way I also urge you guys to trade. Allow the market, give it some time to decide. All right, so this guy has to deep into this point and then give us a decent entry criteria like this. A bullish engulfing candle will be very decent, because if we look close, we have a decent swing low to swing high play right here as far as Fibonacci is concerned. So we see this guy pull deep into this yellow bar before actually blowing from the sky, all the way to some $2,000 per coin. And then once it's broken here, guys, don't worry. We get to let you guys know how to go about preparing yourselves to make the market. So I think I've covered every pair. Now. So let's talk about the last two pairs, which is the Japanese index. So this is the reason as to why I am very confident in my bullish calls as far as the JPY pairs are concerned. Now let's talk, the JPY index now, the index of Japan's economy practically. So as you can see here, we have a decent play here, a very decent play here. So I called out this pair. Now, also, if you want to know what USDJPY is doing at the moment, you can mirror the Japanese index. All right, it's very, very, very simple to do. All right. So as you can see here, we have this. Sorry, the internet is a bit slow. We have this play right here. So this is headed in a downward trajectory here. This is a downtrend. Okay. The internet is frozen. So this is headed, okay, so let's just use this now. So we have this double top here, and then we have a supply level in a downtrend. Now, whenever you have a supply level in a downtrend here, the first and second pullbacks are not always as significant as the third pullback. So this is how you learn to count your waves once you pay for the cost. Enroll for the mentorship, guys. You learn how to count your waves properly. So this is a supply level that we have here. This is a double top. Okay, so this is the supply level that the market was even coming to play with earlier on. So this is it, and it has been tested and validated here, and the market even reacted with a bearish engulfing candle, engulfed the previous week candle. So this is quite huge, and then as you can see, it's looking quite heavy. So the next level target for the Japanese index here is at 688 region. Once it's clear here, we have more space to the downside. All right, and then so now taking this same idea now, moving into the JPY pairs. Now you can now see the reason as to why I'm very bullish on the JPY, USDJPY, CAD JPY, CHF all the JPY pairs are actually headed bullish because their index is collapsing. All right. Now for the last pair on the list now being the dollar index, I have been highlighting the dollar index to the downside for a very long time, and quite frankly, the market has been doing the most. And as things stand here, we have actually come into a very solid demand level or a very solid support area, which is right around this 101 region for the dollar. As you can see here, what we need to see was the pullback to this yellow bar. The market is just so. So it's coming into a Fibonacci play right from the swing high to swing low here. And the market needs to come in and retest this bar here. Once it is set down here, we have space to rotate all the way back down. So provided that this yellow bar holds and this trend line stays without getting invalidated, we have space on the all the way to the downside. So obviously, once this pair is back down, like it is heading back to the downside here, now we have the fundamental target in the 101 region, and then obviously after that we have the 95 region for the dollar. Right? So that is that for this episode of Weekly Outlook. Now be sure to subscribe, leave a like and comment. And okay, so and that brings us to the end of this episode of our weekly Forex Forecast. I thank you so much for staying to the end. And then once again, my name is Desmond Samuel, and I'll see you guys in the next episode. Peace out.